What's going on, everybody? My name is Matthew, and today we have a lot to get through. So strap in, focus up, and this is our agenda for today. We're going to talk about the weird day that we just had, where it was very bloody, kind of pre-market. I was prepared for war. Waking up this morning, I woke up before the market opened, and I was like, "Holy cow! I'm going to have to start writing an essay for the Discord about what I'm thinking right now." But then things kind of turned around, and we'll talk about that. Then, how far will stocks fall? And this is more the retail stocks that a lot of retail investors, probably you and me, are invested in. How much further can they fall, even after a day like this where they kind of had some green for once? And then my game plan moving forward for 2021 based on the different scenarios that could play out. And then 2 new stocks that I've recently invested in. I'm going to share those with you. And you're actually going to probably get a better entry opportunity than I did. And I think these 2 stocks are very exciting. So I'll probably have follow-up videos going in depth into those investments soon. So if you find any value in this video, make sure to subscribe. If you're new here, welcome. And then hit that like button and comment down below if you like this style of video. I kind of like it. I get to kind of talk more organically and show you guys on the iPad, draw and stuff. So anyways, this is the weird day that we've been having. A lot of these stocks, especially these growth and kind of tech stocks, opened pretty red, and they were even worse pre-market. I think I saw Neo at minus 9% pre-market or something like that. So it was down 5% on the open. CleanSpark was down almost 11%, Celsius down 7%, and Teladoc down over 5% on the open today. But then, 3/4 of the trading day through, we still have this much to get through as I'm recording this video. But Neo is green. It's up 2%. And I want you to pay attention to the volume as well as we go through these. But CleanSpark is almost even. Celsius is up 2.5%, and then we see Teladoc up over 3%. Now, the reason I think volume is important is because it can kind of give you confidence, or maybe reason to not have too much confidence in different moves and price action. And this is more kind of zeroing in on the more shorter term stuff, but I want to be clear, I am first and foremost a long-term investor. I just like to kind of track the market, and it gives me a better idea of, a better idea of what to look out for and what opportunities might be there. But the market was kind of average for Neo based on the last 3 months of volume. But again, there is still this much of the trading day left, so it'll probably close a bit above average volume. CleanSpark, probably going to close at about average volume for the last 3 months. And Celsius was trading at half the average volume 3/4 of the way through the trading day. But I think that's because they do have earnings coming up. It's going to be interesting to see what numbers they report. I think that it'll probably I don't see it having a huge beat or a huge jump, but I want to focus on their guidance and also their refrigerators rollouts and also their international revenues year over year, because a lot of that year over year growth, not to turn this into a Celsius video, but a lot of that year over year explosive growth in their international revenue was because of their acquisition. But anyways, Teladoc is actually, significant volume. So that gives me a bit more confidence, at least in Teladoc, to see, okay, it's rebounding. This might be real, because that's definitely a stock that's been beaten down. But yeah, just to mention, I think volume's probably low on Celsius because of upcoming earnings. So now the question is, a lot of these stocks have been really beaten down, the stocks we just went through, and how much further can stocks like this fall? The Palantirs of the world, I don't know, the BNGOs, the GVOs, all that stuff. How much further can it fall? I'm not invested in the Bingos and the GVOs and a lot of the penny stocks, but I'm invested in 3 out of 4 of these. I'm not in CleanSpark currently. But with Neo, it went from 67 to 35. CleanSpark recent highs of 42 to 16. Celsius from 70 to 48, and then Teladoc, my goodness, from 308 to 145. So, are they done falling? Well, I want to clarify something really quickly. This probably looks really weird. Oh gosh, I do not. This looks really weird to have my face and then 4 photos of my face. But I want to clarify something about my most recent video talking about market cycles and cycles of market emotions. So, I want to be clear that I wasn't trying to say that the market in general or ghost stocks in general are at this kind of this point right here. So in this video, I was talking about how I think some stocks may be at the fear, depression, panic, and capitulation stage, and some investors may be there as well. But I was talking more specifically about certain stocks, that are going to better valuations, but not all stocks in general, especially not those, a lot of these spec stocks I personally have not invested in. The stocks that were trading at like a 200 price to sales, and ran up a million percent, in the past in 2020, those stocks probably have a lot more room to fall, and we'll talk about that in a second. But I think some stocks are coming back to fair value. And the way you can, and the subtitles kind of cut me off here, but the way you can tell if a stock is coming back to fair value, in my opinion, a very basic way for a beginner investor is looking at their ratios like PE, PS, price to free cash flow. You can compare it to the historical ratios where it usually trades at on those multiples going back 5 or 10 years for a lot of these companies, and say, hey, this is the lowest PS or PE ratio we've seen in several years. Maybe it's starting to get attractive. But again, a lot of these stocks that I think a lot of people are invested in that are more speculative and trading at much higher multiples, even after these corrections, I think they do have some more room to fall. So on this channel, I usually don't try and promote anything. And the reason I don't take sponsorships, or obviously I don't promote any stocks or anything like that, is because anything I bring to you guys, I want to be really proud of it. And that's why we closed Investor Community for 2 months, because we've been working on some really amazing new features, including live mentor sessions. So I won't talk too much about this. We'll get moving on with the video, but I think it's relevant. We have lessons on beginner valuations. We have one on pivots and swings with Kevin. And we have a lot of lessons coming up. The next one is actually how to use valuation ratios on the 16th. So that'll be a link below if you'd like to join Investor Community. We've been closed for 2 months. This is our grand reopening. But yeah, that'll be linked below in the description and the pinned comment. But I want to give you something right here, right now, in case, now's not the right time to join a group or anything like that. This is one way you can spot capitulation, right? And this is kind of what we talked about here, where it's like that turning point kind of, where it goes down and then up. This is capitulation. So how can you spot that on a technical level? So this is something that Kevin put together, one of the mentors in Investor Community. He's been trading since the 1990s and full-time trader, main source of income for him for the past few years. So this is why I was talking about volume before. Volume is very important to kind of indicating real moves and real capitulation. So really quickly, as you can see here, we have this candle with a very long wick, which basically tells you that in this time frame of this wick, price went from here down to here and then back up to here. And that means there's a lot of buying pressure moving up this way and a lot of volume to kind of support it, which means a lot of people probably felt the same way and moving in the same direction. So this is a quick example of how you can spot capitulation. So what is in store for a lot of these stocks? How much further can they fall? So I think right now it's pretty scary what the SPY looks like. I'm very against scaring anyone in the market right now. Obviously, emotion is not what we want to have as investors, but the SPY is up 41% in the past year, and I literally drew a straight line, and it almost covers like most of the price action. Whoops, I just erased it. It almost covers most of the price action. That's pretty crazy. And also year to date, SPY is up 10.8%. We saw a couple, maybe baby moves down, but right now we're trading pretty. I erased it again. We're trading pretty nicely. And I think, it would not be out of the cards to see SPY correct a little bit. And if SPY does correct and tech moves with it, then we could be in for some more downside on a lot of these high multiple stocks. And high multiple is kind of like interchangeable with the ratios. So stocks with high PS, high PE. And I like to focus on ratios because they're super easy to grasp and they're very easy to access as beginners if you just kind of learn the formulas. And you can use other methods to find intrinsic value, such as a discounted cash flow model and things like that. But to keep it simple, high multiple stocks could see more downside if we do see the SPY correct, which I don't think is unlikely in the next couple of months. We also have some macroeconomic factors like inflation, interest rates, and you can see that, this was from today, May 11th. This is from today, literally this morning. The market is extremely sensitive right now to inflation and also interest rates. And we've seen that when Yellen or Powell come and talk, and the market reacts pretty quickly. This is my plan in a place where we have interest rates higher, inflation higher. Whether or not inflation is here to stay or it's transitory, like many people think, I still do want to position my portfolio to be able to weather kind of whatever happens. And so this is what I think is going to happen. This is my plan. Of course, this is not financial advice, not a financial advisor, but this is my plan moving forward. So I think spec stocks and pre-revenue stocks are probably going to continue to see downside, especially like I said before, the stocks trading at a PS of 40 plus. A lot of these stocks ran up because they were smaller companies, easier to move, had a great story behind it. You know, this company is the future. It's really cheap, and it's just the perfect kind of retail stock to get pumped up hundreds of percent and get ahead of itself based on fundamentals versus the stock and what it's trading at. So, how this impacted my portfolio, I did exit Virgin Galactic, which is a company that's not generating revenues from its core business yet. And there are predictions for it to have incredible revenue growth over the next couple of years as they start launching people into orbit. And I think that business model is great, but what I don't like is management. Not only did management sell a lot of their shares, showing me it's not really their priority, and usually selling shares is kind of, oh, you don't know why they sold, but they sold significant portions. I believe Chamath sold his entire portion, and management has continued to push back deadlines over and over and over again. And so those projections are only going to come true if the timeline actually stays consistent with what they're projecting. And with Virgin Galactic, over the past year and years, they have proven that they are not reliable when it comes to their timelines, test flights, and progress. And now we have other competitors like Blue Origin who are already making steady progress. So that's why I've exited that position. It was never a large position of mine. We exited with a decent gain. But growth and tech and high multiples. So I think they'll either continue to trend down, kind of like this, or maybe they'll consolidate, kind of trade sideways. This, I think, depends on the broader markets and broader market sentiment. But I think they'll continue to trade down or sideways. And if they trade sideways, it's really just going to be waiting for revenue and earnings to catch up to their multiples and valuation. So an example of this would be Celsius. It's why I'm not necessarily selling this stock. I'm kind of just holding it for now. And again, earnings coming up. And a new stock that I've added to the portfolio kind of fits into this as well. And this is a profitable stock, high growth stock, and one that might be misunderstood by Wall Street. And then there's boring stocks and value stocks. And I don't think boring stocks get the respect they deserve, right? So Eli, for example, is up like 12 or 13% today off of really great earnings and really great guidance, massive beats. And their core business of Callaway is meant to surpass 2019 levels, and Topgolf is meant to get back to 2019 levels. And their liquidity on their balance sheet is at near all-time highs, I believe. So really strong position for Callaway. Excuse me. And then I added another stock that fits into this kind of boring category to my portfolio. So right now I'm at 12% cash for my portfolio, and the portfolio I'm talking about is the public portfolio that I've shown in the past, and that is the majority of the money that I have in the market. So it's not like I have some tiny show portfolio that doesn't really impact my net worth. This is like really what the money I'm playing with is serious money for me. And so if inflation does continue to rise, which it probably will, at least for the short term, I'm looking for stocks that have pricing power and good margins, because margins may be compressed, at least over the next couple of quarters. And then if interest rates continue to rise, I want to be prepared with stocks that have strong balance sheets, meaning that their debt to cash ratio is nothing to be too concerned about, because if interest rates rise, borrowing is going to get more expensive, and that could put a lot of these, again, pre-revenue stocks who are depending heavily on debt to keep their operations up and running, high cash burn, that could put them in a very difficult situation, and you could see them fall further. And then free cash flow, what this means is companies that are generating cash instead of burning it and using it, companies that are actually adding cash to their balance sheet every quarter because of business operations, and then profitable would be a bonus for sure. So that's kind of my game plan right now. And also I'm being very patient. So these are all the messages starting all the way back in the beginning of March when this correction was really starting to happen. All these messages are me telling my community or investor community to be patient in the Discord. And I especially like this one. This is from March 25th. It says, if you are out of cash, there are things for you I do. I'd either try and get cash flow as any way as possible. I use DoorDash nonstop if I need cash for my brokerage account. It was a grind, but it let me invest. Or perhaps reevaluate your positions and find your lowest conviction plays and ask yourself, if I sell this, do I have a better place to invest it? Perhaps a higher conviction play that's now at an irresistible price. So the mantra and motto for me during this whole past couple of months has really been be patient and wait for those valuations, and so far it has been paying off. These are the two stocks that I've added to my portfolio to finish off this video and wrap everything up. I added Alibaba and Playboy, or PLBY Group as they are now branded and called. So the second one might sound kind of crazy. Trust me, it is actually a pretty decent investment in my personal opinion. People think it's just NFTs. People think it's just, an outdated brand, but they have completely switched their demographic. They have completely changed their business model. Their magazine has been discontinued. They are going with really positive messaging and supporting the right social causes, in my opinion, and promoting body positivity. And they're kind of like the way I see them is like an octopus expanding their business tentacles into a lot of different areas in, I'll get into it in the in-depth video, but I'm very excited about this one. It's about 2% of my portfolio though, so I want to make that really clear, because to me this is a bit speculative, just because if you look at this chart, it looks like that. It's kind of parabolic right now, but they've got earnings coming up, so looking forward to those numbers. And then I added Alibaba at a 4.6% position in my portfolio, and the reason it's not higher is because it does come with that Chinese risk. But I do believe that this is a stock that is historically undervalued. If you look kind of at the historical ratios, a lot of the PE, PS, price to free cash flow, it's all trading near 5-year lows for this company, and it's an absolute beast. It generates a ton of cash, and the recent fines were kind of a slap on the wrist. It could have been a lot worse, and the fact that it wasn't worse kind of shows me that the relationship between Baba and the CCP maybe is not as bad as many people think, and I think that they definitely got away with a punishment that was not as bad as a lot of people were expecting, and we're probably in the clear for at least the next few months or so. So this one, it could turn into a long-term investment for Baba, but right now I'm really riding it for that value appreciation, because I don't know if I want to hold it over the long term due to the risks that I can't control of it being a Chinese company. But at least for now, I feel like we're kind of in a mellow state with this one. And then Playboy is a speculative stock for me, about 2%, but I do see myself adding this to this position if it drops after earnings, if the numbers warrant it. So if you found any value in this video, and I hope you did, there was a lot in this one, make sure to hit that like button, subscribe, and again, investor community is open for new members after 2 months. I'm very excited about it. And that'll be linked in the description below. So if you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.